If you or someone in your family receives Social Security or SSI, close whatever else you're doing for the next several minutes, because there's a change moving through the Social Security Administration right now that decides how closely the government can look at your bank accounts, and most people receiving benefits have no idea it's already happening. This isn't a rumor pulled from a comment section. It's an actual directive the SSA issued to its own staff, and by the summer of 2026, it reaches nearly every person who applies for or already receives supplemental security income. I've spent years tracking changes to Social Security, SSI, and Medicare, and the thing that keeps happening is this. The agency changes a rule, it takes effect quietly, and the people it affects find out only after a check gets reduced or a bill for repayment shows up in the mail. My goal today is to make sure that doesn't happen to you. Before we go further, if you haven't subscribed to this channel yet, now is the moment to do it. Rules like this, one change every few months, and the Social Security Administration does not send out a plain English explanation when they do. You get a form letter full of program codes, or you get nothing at all until your payment changes. This channel exists to translate these changes before they land on you, so hit subscribe and turn on notifications, because the next update might be the one that touches your specific check. Here's what we're covering. First, what this bank verification system actually is in normal language. Second, exactly who it applies to today, and why people on regular retirement benefits shouldn't tune out even though this rule is written for SSI. Third, what the system is actually capable of finding inside your financial life, including accounts you may have completely forgotten about. And finally, a scam that has already started circulating around this exact rule, plus the specific steps that keep you compliant and keep you safe. Stick with me to the end, because the checklist near the close of this video is the part that actually protects your benefit. The system at the heart of this is called AFI, short for Access to Financial Institutions. It's not brand new. The SSA has had the ability to electronically check bank balances for years. What's changing is how the rule requires it to be used. For a long time, the agency only ran a deep bank check when someone reported resources near or over the SSI limit. If you said you had very little, that statement was often taken largely at face value, with only lighter verification behind it. As of the recent emergency directives moving through 2025 and into 2026, that light touch approach is gone for SSI. The agency is now instructed to run AFI verification on essentially all new SSI claims and reopened claims, and to keep verifying periodically for as long as someone stays on the program, regardless of how small the person says their resources are. Why is this happening now? Because SSI is a needs-based program with a resource ceiling that hasn't moved in decades. $2,000 for an individual, $3,000 for a couple. Those numbers were set in 1989 and have never been adjusted for inflation, even while the cost of everything else has climbed. The SSA's own data shows that a large share of overpayments in this program happen not because someone lied on an application, but because their financial situation shifted after approval and nobody updated the file. More frequent, more automatic verification is the agency's way of catching that drift early, before it turns into an overpayment notice demanding money back that a senior has often already spent on rent or medication. Now, if you're on regular Social Security retirement benefits or Social Security disability insurance rather than SSI, you're right that this specific directive doesn't apply to your check today. Retirement and SSDI are based on your work record, not your current bank balance, so there's no resource test and no AFI scan tied to those benefits. But don't switch this video off yet, because it's worth understanding where this machinery is heading. SSI has always been the testing ground for financial verification tools inside the Social Security Administration, since it's the one program explicitly built around counting what you own. Any future move toward means testing other benefits, a conversation that keeps resurfacing in Washington regardless of which party is in charge, would require exactly this kind of bank-checking infrastructure already being built out for SSI. Understanding it now means you won't be caught flat-footed if it ever expands. Let's talk about what AFI can actually see, because this is the part that surprises people. When the system runs on you, it doesn't just confirm the one account number you wrote on your application. It performs what the SSA calls geographic searches, up to 10 per person, per review, built around your address and identifying information, and it can catch accounts tied to a representative payee too. That means it surfaces accounts you disclosed, but it's specifically designed to also surface ones you didn't. And this usually isn't about anyone hiding money. It's about the checking account from a bank that got absorbed into a bigger bank 15 years ago. The credit union account that was opened for an old car loan and never formally closed. The certificate of deposit a parent or sibling set up that quietly kept earning interest while nobody thought about it. If you genuinely forgot an account exists, the system does not forget it for you. It counts it. And if that pushes your total over $2,000, it can affect your eligibility going forward and open up a repayment claim for whatever you were paid while over the limit. What counts as a resource in this search? Checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and even those old-fashioned Christmas club or holiday club savings accounts. The reach covers virtually every state and territory, and roughly 96% of financial institutions participate electronically, meaning the check often happens without you ever being contacted about that specific step. For the small number of institutions that don't connect electronically, the SSA falls back on a manual paper request instead. But either way, very few accounts stay invisible for long. So what should you actually do with this information? If you're on SSI, sit down this week and make a real list of every account with your name attached to it, not just the one your monthly payment lands in. Include anything old, anything you're not sure is still open, anything set up by a family member. If you're uncertain, call the institution directly and ask whether the account still exists and what the balance is. Then add it all up against the $2,000 individual or $3,000 couple limit. If you're comfortably under, you likely have little to worry about from a routine check. If you're close to that line, treat that as your signal to get clarity now, because it's exactly the people sitting near the limit who get blindsided by one forgotten account tipping them over. And if your circumstances have genuinely changed, you inherited something, a family member gave you money, you picked up part-time work, report it to the SSA promptly rather than waiting to see if a scan catches it first. Timely, accurate reporting is the single strongest protection against an overpayment demand later. Now, the scam. Anytime a real rule change like this gets attention, a fake version of it starts working the phones within days, and this one already has. Here's the pattern. Someone calls or emails claiming to be a Social Security compliance officer, a benefits verification specialist, or a federal account reviewer. They say that because of the new 2026 rule, your account needs to be pre-cleared or protected from the scan, and that they can handle it for a fee. Sometimes a flat charge, sometimes a cut of your future benefit. Remember this one sentence, and you'll never fall for it. No company, person, or service can shield your bank account from an official SSA verification, and there is no fee that buys you out of it. The Social Security Administration does not outsource this process, and it will not call you out of nowhere demanding your Social Security number or bank account details to comply with a rule. If you get a call like that, hang up. If you want to check anything about your own account, call the SSA directly at 1-800-772-1213 using a number you look up yourself, not one a caller gives you. To report a scam attempt, contact the SSA's Office of Inspector General Fraud Line at 1-800-269-0271 or file a report with the FTC at ftc.gov. To bring it all together, if you're on SSI, inventory every account you have, know your total against the resource limit, report changes as they happen instead of waiting to get caught, and never trust anyone who says they can shield your accounts from verification for a fee. This shift toward closer, More automatic financial checking isn't reversing, and nobody at the agency is going to call and coach you through staying compliant. The system just runs. The people who come through this fine are the ones who understood how it works before it ran on them, which, now that you've watched this, is you. If this helped, share it with someone in your life on Social Security or SSI who needs to hear it, and subscribe so you're here for the next update before it quietly changes your check. I'll see you in the next one.